Hello, everyone. Thank you for taking time out of your Wednesday to come hear me speak today, and welcome to this educational presentation. Now, today, I want to talk to you about powerful short-term setups that last really only 1 to 2 weeks. So if you're someone who doesn't want to hold on and keep your money tied up overnight, or a lot of nights, I should say, well, this is a perfect method for you. Let me share with you this older chart here, and this is in ASML. As we can see, most traders would look at this and say, well, okay, it's going up, which is what I wanted, but you know what? I'm kind of late to the party. I really wanted to buy it lower. I haven't gotten in yet. And that chat room I go to say that the stock is now overbought. So it's kind of too late for me to get in. I'm going to wait for it to come down, maybe to fill this gap down here. And that's when I'll buy, okay? That's the time that I'll look to get in. And so that's the way most traders think. And that's the way I should say most traders like to trade, basing it off what someone has said or someone is telling you in a chat room. Well, so you think it's overbought. And then for a day or two, you think, hey, I was right. Maybe it is going to go down a lot lower, and maybe it's going to be worse than I thought. So you decide to sell. Okay. So you sell, maybe you buy some puts, and then look what happens. All right. Very familiar, right? This is often what happens. The minute you get in one direction, the market seems to go the opposite. Well, in today's educational presentation, I'm going to teach you a method that actually wouldn't have sold at all here. In fact, on the very same day you thought to sell, it generated a buy signal. So potentially you could have captured 68 points in just 3 days. Now, everything I'm going to be explaining and teaching you today is done with ease and ease of access, just one click away on our platform, the PTS Primo charting platform that helps you identify and trade these short-term setups. So this promises to be a great educational class today. Welcome. My name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, our main goal is simply to educate you. I know a lot of other webinars you may have attended in the past say that they are educators, but really what they want to do is sell you their idea of how you should trade and just basically copy whatever they're buying or selling and have you come along and mirror everything. Well, that's not really educating you. What that's basically telling you is just to copy whatever I do. Now, the entire industry is based on that premise where you just simply have to copy some so-called guru and you'll be able to be successful. But if that works so well, then why has it been estimated that 85% of all traders fail? It's because that does not work. And trust me, I know, because when I first started trading 45 years ago on the floor of the Pacific Stock Exchange, that was the same premise that was taught to us. All we had to simply do was follow someone who was successful and mirror whatever they were trading. And by gosh, we would be successful ourselves in a year or so. Well, for the first year or two, I thought I was going to be out of the business because I couldn't make ends meet. It wasn't until my mentors taught me, these were also traders on the floor, all the things that I teach my students around the world. And those are the things that helped me to become a consistent trader. And that's what I do with all of my students in over 115 countries and in every state in the United States. I try to teach them the things that have high levels of consistency so that you, no one else, but just you, can make your own trading decisions. This is the concept and our philosophy behind education at Specialist Trading. Hopefully, we'll show you that attention to detail in today's class. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, since we are an educational company, all examples you're about to see are strictly for educational purposes only. Now, if you're new to my webinars or you haven't taken any of our courses, another way to become more familiar with us or to even get some more education on a daily basis is simply to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post anywhere from signals that our strategies have generated in current markets, anywhere from stocks, futures, currency pairs, cryptos, E-mini futures. And also I give little bits of financial wisdom to help you trade along the way. So there's lots of great free educational information on a daily basis. Please feel free to follow us on Twitter. Now, remember, we are different from other webinars you may have attended, in that if you've come here thinking that I'm going to tell you what I think the market's going to do, or I think what the best stock is to buy or the best stock to avoid that you should not touch or maybe short, you've really come to the wrong place, because remember, that's the way the entire industry is based on, you simply following what someone else says or does. And that couldn't be further from the truth, in my opinion. So what we try to do is teach you the things that have stood the test of time so that you can ultimately make your own trading decisions. What we like to call a buffet line of really consistent techniques. We supply all of our students and members with a basic format for a strategy. And then we furnish all of our students with 6 or 7 different entry levels, 6 or 7 different exit points, and 6 or 7 different stop placements, and then ways in which to monitor and track the trade. And then it's up to you, the student, to decide which one feels the best for you. You can mix and match from all the things we give you, just like a buffet line of different courses you can have in a meal. That's the way you should trade. And in my opinion, that's the only way one can become a consistent trader, not by simply following what someone else does, but by making your own decisions. So the service we provide is giving you all these consistent techniques and methods so that you can make your own decisions. And we're with you every step of the way. Now, as you can see here, my goal is not to force feed you signals or trade for you, but my goal is simply to teach you how to trade with a specialist edge. Same edge that was taught to me some 45 years ago, and what has sustained me, I believe, for 45 years. So hopefully it will be able to do the same for you. Now, before we begin today's educational class, just a few announcements. I know I've said this before every webinar, but we still have people who are new that don't fully understand. Please disable all cameras and microphones. This isn't an interactive Zoom webinar or meeting. This is simply a static PowerPoint presentation. So we're not going to, although we'll take questions at the very end, we're not going to take questions over video, over microphones. You can type them into the chat box. Now, so we will take questions, but at the very end. So if you have a question, kindly write it down and try to remember it. Many times students tell me that they write down a question and then it's answered on the very next slide. So I promise I'll get to each and every one of them. The only question I will answer is the most common one, and that is this being recorded? Sure it is. We record all of our webinars. So if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to today's recording. So remember, disable all cameras and microphones and wait till the end to ask any questions. With that stated, let's begin today's educational presentation. And the method I'm going to be talking about today is strategy number 10. All right. Now, if you're not familiar with strategy number 10, let me share with you some of the highlights of this particular method. It's an entirely short-term based strategy. Now, before a lot of you run and turn off, the Zoom platform, that does not mean that you have to be a short-term trader to trade this. In other words, that does not mean that it's only going to generate signals for traders who like to intraday trade or get in and out quickly. What it means is that the strategy is based entirely on short-term tools or short-term requirements. Many of our other methods are best taught by sharing some overall trend issues as well as longer term requirements. Well, this doesn't take any of those into account. For example, it does not apply the buy-sell line to determine the trend. Now, if you've attended my webinars in the past, we always talk about applying the buy-sell line to your trading because that will tell you the overall trend. Well, guess what? Strategy number 10 does not use the buy-sell line. So if it doesn't use that to determine the trend, what does it use? Well, we're going to tell you exactly in a few minutes, and usually we'll share that for members of the course, but we'll tell you what it defines the trend with. Now, it's a combination indicator-based and pattern recognition strategy. Usually our strategies are based on a set of indicators and their relationship to one another or a specific pattern. But very rarely do we have a combination of the two like we have in strategy number 10. So this is a little bit different as well. Now, strategy number 10, most trades are designed to last just 1 to 2 weeks. So this makes it ideal for option timing. If you're an option trader and you don't like to be in trades a lot, and you just want to get the thickness of that strong run and get out, this makes it perfect if you're an option trader. Now, we have both aggressive and conservative versions. Aggressive versions are for those traders who like to take on a little bit more risk. The conservative versions, obviously, are for the ones who want the least risk. So you can decide, once again, we're providing you with these different variables. It's up to you to decide which method or which style you want to trade. Now, you can use this short-term method to offset long-term investments. For example, a lot of traders will say, well, Steve, I'm not really a trader. I'm more an investor. I kind of hold on to things for the long term. Well, that's great. But if we go into a sustained downward move, not just like the one we've had for the last month or so, but I'm talking about maybe for years, This could help you offset those losses you have in your long-term investments. And then finally, and I think most importantly, this method is extremely consistent. You've heard me talk about consistency before because most people have a misconception of what consistency means. Most traders think if something's consistent, that means there's a lot of winners, right? That means that the majority of the trades are winners. No, that's not what consistency means at all. A consistent method is one that has an awareness of losses. It means it knows that it will have losses from time to time. But a consistent method is one that's able to recoup those losses. You see, that's what you want in a method. I can't tell you the amount of new students I've met that pay, $10,000, $20,000 for this fantastic system that's supposed to, generate 90% winners and have these big home runs. And for a short while, it did. But then all of a sudden, it went to a drawdown and it gave back everything. Right? I'm sure we've all been there. I know when I first started trading, I was there. Something would work amazing for a month or so, and then it wouldn't work at all, and I'd give back everything. See, that's not a consistent method. And the reason why we don't want to trade methods like that is because they won't sustain you. You see, as your educator, I want you trading for a good 15 to 20 years. I don't want you just trading for a good 15 to 20 minutes, all right? I want you having a nice longevity to your trading. And that's what consistency will bring you, a 2 steps forward, 1 step back approach. Okay, so I can't give away the entire process of strategy number 10 and some of the rules the way I do with some other pattern-based strategies because they have roughly anywhere from 4 to 5 rules, and many times I'll share a couple of the rules. But with strategy 10, it's very minimal. It's mainly only 3 basic rules. So I can't share anything because most traders would reverse engineer it. But I can share with you one thing. Remember, we always want to be in sync with the trend. But we're not going to use the standard tool we have in the past for determining the trend. That's the buy-sell line. So what are we going to use? Well, since this is a short-term method, we will use a short-term tool, and that is the PET-D. The PET-D is a tool I've been trading now for over 4 decades that I learned on the floor, and we've developed it into a color bar tool to help us define what the short-term trend is. For example, as we look at this older chart in AMT, most traders will say, well, yeah, Steve, what do I need a short-term trending tool? The trend is obviously down. But what happens when it all of a sudden reverses, right? And you're caught still selling or on the sidelines thinking that it's not going to go up. Well, we've developed this into a color bar tool. So red bars will tell us that the trend is going down, whereas green bars will tell us that the trend is going up. So once we apply the PET-D, you see how it identified well in advance by a series of red bars that it wanted to go lower, and well in advance by a series of green bars that it wanted to go higher. Did the same here in this older chart of Aetna, okay? Straight up, you think, oh boy, this thing's going to go to the moon, and then quickly reverse. Now, whereas the PET-D is not a predictor, it doesn't predict how high or how low something will go, and it doesn't predict tops or bottoms. It is, in my 4 decades of trading, the best tool I found for capturing the short-term trend. So this is what we're going to identify the short-term trend. We're going to apply the color bar tool, the PET-D. If the bars are green above a buy setup, that means that it wants to go higher. That's a valid setup. It's because we're in sync with the short-term trend. Now, if we get a buy signal, but the bar was red, we wouldn't take it. Now, obviously, if we get a sell signal, we want to see the bar below that sell signal colored red like this. All right, now, that was the main thing I can divulge and share with you. But the buys are setups usually on shallow pullbacks. This means a 1 to 3 day pause or a sell-off in a short-term uptrend, the short-term uptrend being the PET-D green bars. Conversely, sells will be identified as shallow pullbacks. That's a 1 to 3 day pause or bounce in a short-term downtrend. Okay, that's it. It's basically that simple. The remaining 2 rules we just can't divulge, but once again, they're indicator-based and pattern-based as well. Okay, so let's look at the process in action and how you could identify these setups. Remember that chart we first looked at in ASML? Okay, maybe we went to that chat room and that so-called market guru told us, well, this is overbought. All of my proprietary indicators are saying you got to short this, so I think you should get ready to sell it. And then the next day you felt good because it did go down. So maybe you jumped in and you said, wow, I don't want to miss this. this guy's usually right. That's what everyone says. So, you decide to sell. Okay. Now, let's see what the market is telling us, because remember, the pet D is simply a translator. It translates what the market wants to do. It doesn't translate what some guy in a chat room wants to do. It doesn't translate what the earnings estimate should be. It doesn't translate what the support and resistance is, or it doesn't translate what some guy on TV says about the jobless claims. It doesn't take any of those things into account. It simply translates on a tick-by-tick basis what the market wants to do. So in order for us to sell this bar should be red. Now remember, this is not a strategy 10 sell signal. This is just you listening to some guy on TV telling you to sell, okay? Let's see what the trend is telling us through the PET D. Now on our platform, it's as simple as clicking on PET D and the bars change. Now, even though the day was down, if I go back in one slide past, we see that this was a down day. But remember, just because a day is down, when we color the bars, it doesn't have to be red. It can still be green, as we have right here. So this is telling us that the market closed lower, but the trend is still up. So you never want to go against the short-term trend. So therefore, that's not a real valid sell signal. I wouldn't care what anyone says. I wouldn't base it off anything what someone's saying in a chat room or on TV if you're out of sync with what the market's doing. After all, that's the main thing we should be listening to, the market, right? Not some guy in a chat room. Now, let's see if the requirements for strategy number 10 setup have been generated. So we click on strategy number 10 on our platform. In the drop-down menu, we'll click on signal arrows, because this will tell us if there's a valid setup there. Now remember, in our course, we'll teach you what to look for. This is not a black box. You automatically know if a setup has been generated. But while you're learning, you want to check your work, click on the tab and click on signal arrows to see if you were correct. And you were. There's a buy signal right there. So where everyone else, based off this so-called trading guru, is selling, you're saying to yourself, well, the short-term trend is up and the short-term requirements have been met on this strategy, so I'm going to buy. And there's where you could have potentially captured 68 points in 3 days. See how simple that was. Didn't look at any earnings estimates. We didn't have to listen to someone in a chat room. We didn't have to go, read a blog and find out what they liked about the stock. Remember, 85% of all traders fail for that main reason. You're giving your power away and letting someone else make your decisions for you. Now, just because strategy number 10 generates a buy signal, you still don't have to take it. It's your decision. And you can decide based off the risk parameters that we teach you. You can decide based off the entries, different entries we teach you. But the main thing is you should decide, not someone else. That's a recipe for disaster. Here's an example, an old example in DAO, okay? Obviously, the trend has been going lower, but you took that $10,000 course on support and resistance where all the institutions are buying and selling, and that's a major support level right there. So you say to yourself, Steve, I've got to buy this. On top of that, I took another course, a $5,000 course on candlestick patterns, and that's a bullish engulfing pattern. So we have two double whammy positive things. You got to buy, right? So sorry, Steve, can't really listen to this stuff now because I spent a lot of good money on those other courses, and those guys are never wrong either, right? Well, let's see. What is the market telling us? Because that's the only thing I listen to. And the way I listen to the market, excuse me, is by applying the translator, which is the PET D. So if we wanted to buy here, let's see if the PET D confirms it. Click on PET D. Nope. Every time you get a buy signal, the bar above it should be colored green. And every time you get a sell signal, the bar below it should be colored red. But this means that that's not a valid signal, regardless of what strategy you're trading. The odds are against you that it will be successful. Now let's see if the requirements are met for strategy number 10. Click on strategy 10 on our platform. In the drop-down menu, click on signal arrows. And look at all the sell signals that were generated in advance of this so-called support and so-called bullish engulfing pattern. I don't know about you, but I would have taken these much more than that conventional wisdom where things that really don't show any high levels of consistency. I was taught to trade candlesticks in the late 70s and early 80s. I was also taught about support and resistance. I was also taught about, what's it called, Fibonacci retracements. Trust me, I was using those things 4 decades ago and they couldn't help me. it wasn't until I started applying these sound fundamental techniques that I started to become consistent. So did this or any of these setups work out? Yeah, nice 17 points in the next couple of weeks. Okay. So these were older examples just to show you how well and how this process is applied. There's some more if you happen to miss that. Let's now look at some recent strategy number 10 signals that lasted only 1 to 2 weeks. Remember, if you're an option timer, this is perfect for you. Or even if you're just someone who wants to hold on to positions and not tie up a lot of money for more than a couple of weeks, this is also perfect for you. Okay. So let's see this first example in Amgen. All right. Stock kind of seems to be going a little bit higher, but not really exciting. Don't really have a clear-cut idea. What is the translator saying? Click on Pet D. And originally was saying, well, the market wants to go lower, but at this point it changed and said it wanted to go higher. Okay, so this means we want to be a buyer now. Click on strategy number 10. In the drop-down menu, click on signal arrows, and we have 2 buy signals right here. This was coming into March, just about 3 weeks ago. 15 points in 4 days. Not a bad little quick little trade, right? Okay, PCAR. Now, most traders would say, wait, Steve, we kind of hit this bottom right here. We're bottoming and bouncing right back up. So this is major support again. I can't go against that support. After all, the institutions are the big money, right? The big banks, they have all the big money. So they're buying right there according to this class I took. So I don't want to go against them. Well, just a little bit of personal information. I traded with the institutions some 4 decades ago when I was on the floor of the stock exchange. In fact, whenever they wanted to place orders with me, since I was a specialist, they would walk up to me and give me their order, sometime for an order to buy 1 million shares, sometime orders to sell 2 million shares, and it would sit in my book. And just based off my experience, they had the worst track record of any traders I've ever traded with. They were always too late, or they were canceling orders, or they were entering them too late or missing it. So I would not put any faith in what the institutions are doing. That's just my personal opinion. If you want to, that's great, but we don't teach any of that in our courses at Specialist Trading. We only teach to listen to one thing. That's the chart in front of you, the market. So what's our translator saying? Well, we apply the Pet D, and it's saying, well, you think there's support. The market is telling me that the bars are all red. So it's telling me that most likely it wants to go lower, even though it hasn't happened yet. You see, we have a couple of up days here, but the outline was red. So this is not, something where, well, Steve, it's an up day. I thought it's supposed to be colored green. No, this just means you have an up day. Its outline is red, so that's an up day in a short-term downtrend market. You don't want to be buying that. So if we look for and identify strategy 10 signals, we click on strategy 10 in the drop-down menu, click on signal arrows. And what do we have? 2 signals generated just a couple of weeks ago, first week in March. And we see in the next 2 days, the stock dropped 10 points, about 10% of its value. That's not a bad little trade for 2 days, right? Do you think you could have done well trading options with this? All right, here's an example now in CERN. All right, someone would look at this and say, well, that's a bearish engulfing pattern. That doesn't look very good, Steve. And we've been going up, and that's a textbook bearish engulfing pattern at the top of an uptrend. All right, we don't really apply candlesticks in this way. So what is the market telling us? Well, the market's telling us that it wants to go higher. Until the bars change consecutively red, we're still in a short-term uptrend. Even though we had a down day here, the market wants to go higher. We apply strategy number 10, and there's a buy signal right here. So you had all the wherewithal to take that. That would have been a nice trade because you could have potentially made 18 points in 2 weeks. Now, as the stock went higher, it gapped up tremendously. Now, I was told that it gapped up on buyout rumors or buyout conditions, okay? Once again, that's fundamental news. Now, someone would say, well, Steve, don't you need to know the inner workings of the company, what's happening? Well, let me ask you, did we need to know a week in advance that this was going to be bought out, or maybe there were buyout rumors? No. I mean, I stopped looking at fundamental news 4 decades ago. And if I'm still here trading, I'm living proof that you really don't need that in order to be consistent. So I just listen to the market. And in my opinion, the market tells you in advance, most of the time, in advance of any news. And so you're usually on the right side. Not guaranteed, but many times you are. So I stopped looking at, fundamental news and earnings and buyout rumors decades ago. Here's an example in MU, micron, okay? Obviously, we've been going lower, and we kind of paused right here, but the trend is still down according to the red bars. That's a sell signal generated by strategy number 10. All the rules have been met. 11 points in the next 3 days, coming into just about a week ago. Here's an example in TMUS, okay, T-Mobile. Now, as we look at this, we see that, well, okay, nothing's really happening, but I want to share with you this example because we're going to be talking about consistency. All right, remember what I said about consistency? It's an awareness of losses. Now, even though this looks like a range market where nothing is happening, let's apply the PET-D. And the PET-D is telling us it wants to go lower, okay? So at this point, on a tick-by-tick basis, the market is telling us it wants to go lower. Now, if we apply strategy 10, we have a sell signal right here at the top. Now, for 3 days, nothing really happened. It went a little bit lower, but kind of sideways, really. And then look what happened. Not only did it go back up, but it changed its mind. Now we have a series of green bars. So if you used one of our standard stop placements that, once again, we teach you and give you in the course, you most likely would have had a losing trade and been stopped out with a 3-point loss. All right, not a lot, but that's on average, you would have lost 3 points. All right, if you want to be more risky, maybe 5 points, even less risky, maybe even just 1 point. But let's just split it in the middle, 3 points, okay? Now, at this point, this is what most traders do, myself included. When I first started and I was searching for answers, the first losing trade I'd get, I'd say, hey, this stuff doesn't work. I want a refund. I'm not happy with this. The first trade I get into loses and it doesn't work at all. So I don't trust this anymore, right? I'm sure you've been there. It's extremely frustrating, but you have to be watchful, especially with consistent methods. Because remember, the basis of a consistent method means that you will have losses, but you have to be watchful because oftentimes the very next trade will recoup that loss. You can't just go walk away and sulk in the corner or throw your computer out the window. You have to be watchful. So as we see here, if we applied strategy number 10, on this day, a buy signal is generated. And in the next week or so, you could have potentially captured 20 points. So this is what we mean by consistent. It is an awareness that you will have losses, but oftentimes the very next signal, maybe a signal or two later, you're able to recoup that loss and potentially make even more. All right, here's another example. Let's look at NTES, all right? This was just a couple of weeks ago. Obviously, all the bars are red. So even though we're having 2 up days in a row, the outline is red. So don't get fooled in thinking, well, we bottomed out. It's starting to go back up. This is the beginning of an uptrend, right? That guy in the chat room thinks we've bottomed out. No. Let's apply strategy number 10. And strategy 10 generated a sell signal on the close of this day. In 3 days, you could have potentially captured 10 points. Now let's see what happened after that, okay? So you're happy. Let's say you're thinking to yourself, boy, this is great. I made 10 points. I still am short, or maybe, I'm hoping for it to be 20, 30 points. I'm excited. And then look what happens. The next day kind of closes a little higher, still red. And then this day it gaps way up and the bar is now green. Well, not to worry, because at this point right here, I'm going to share with you later on in today's presentation how you could have exited right here with a quick 10-point gain in three days and exited the trade altogether and not suffered any losses. All right, let's look at VRSK. All right, now, obviously, once again, looks like a directionless market, right? Nothing happening. That's the way most traders are taught. If we see something going sideways, we're taught, well, stay away from it, or this is a whipsaw market. The market isn't doing anything. Well, that's not true. When you learn to listen to it by using the translator, it's actually giving you some ideas. Now, even though we have green and red bars here, the majority of the bars are green. But remember, in order for us to get a sell signal, that sell signal has to be placed where above a red bar. And in order to be a buy signal, that buy arrow has to be below a green bar. It can't be the opposite. So let's apply strategy number 10. And we see here that we have actually 2 buy signals. So even though nothing much happened for the first 3 or 4 days, ultimately, 2 weeks later, you could have potentially captured 24 points. So oftentimes it takes a little time for it to kick in. That's why we say give or take 1 to 2 weeks. Here's an example in CHKP. Once again, all the bars are green. A buy signal was generated here just a little over a month ago. And in 2 weeks, the stock jumped up 23 points. All the bars continue to be green. You see how we have 3 down days here, but they're green. Now, if you had said to yourself, hey, well, Steve, I better get out, there's 2 down days in a row, you would have been kicking yourself a week later when it went higher. This is the beauty of the translator. Even though you may have a down day, if it still colors it green, the odds are in your favor that most likely it'll continue going higher. All right, Zoom, the platform we're on at this very moment. Okay, this was coming into March this month. We see here that we had a nice week of downward pressure. How could we have taken advantage of that? Well, if we applied strategy number 10 right here, we would have seen that we had, once we clicked on the signal arrows, a sell right at or near the top there. And in a week, we could have captured 28 points. It's not a bad little trade, right? Now, let's say we got out of the trade and then it bounced for 2 or 3 days and then went lower. Well, that's okay, because if the conditions are met, you could have taken advantage of this second signal right here and potentially captured another 15 points in 3 days. This was coming into just a week or so ago. So over 40 points you could have captured just in the past month using strategy number 10 when the market was coming to the downside. And these trades lasted no more than a week. Here's an example in REGN, all right, Regeneron. Once again, we have 2 buy signals, and someone say, but yeah, but Steve, we have 2 red bars. Remember, all we're concerned with is the color of the bar over the arrow. If this color of the bar was outlined red, that would not be a valid signal. We wouldn't take it. Same with this one. But since they're both green, they're both valid. Now, it's up to you if you want to take them. If you decide that it's too much risk, this is an expensive stock. So you may say, it's too much, too expensive for me. I'm going to bypass. That's fine. There are tons of signals being generated in other markets. But let's say you wanted to buy some calls, maybe a spread with an upward bias. Well, it took a little while. Nothing really much happened this week. But then coming into this past week, 70 points in just 2 weeks. All right. Now, remember, we talked about getting out, about exit points. Remember, in our course, we teach our students upwards of 6 or 7 different ways to exit. It's like a buffet line. You choose which one you want. Some of the exits are designed to get you in and out quickly. Some are designed more moderately. Others are designed to keep you in as long as possible. Others are designed to track the trade. Remember, there's no one right or wrong way to enter, place your stop, or exit. The wrong way is when you follow someone else blindly. So you have to make your own decision. The good news is the service we provide is we give you multiple choices for you to decide how to trade. So here's just one of them, and it's automatically placed on our platform. For example, here was a buy signal in Microsoft. There's an older signal, okay? Strategy number 10, the bar is green. Now, with one-click access on the arrow, you would have seen 4 exit levels automatically appear. This is just one of our different exit plans, all right? Now, if you're the kind of trader that likes to get in and out quickly, you could have used these first 2. If you like to swing trade, we would suggest the 3rd level. And if you like to get as much bang for your buck, we say, well, the 4th level is the best one to use. But we always suggest, especially for beginning students, to exit their position entirely at the 4th and final level. So let's see what would have happened. Let's say you got long this stock, maybe you bought the calls. It doesn't matter. It's your choice, once again, how you want to trade. We don't tell you that this is only for buying stock, or this is only for options, or you have to trade a certain spread. You decide. That's not our job. Our job is to provide you with the tools, then you decide how you want to enter. So let's just say you bought the stock, and look what happened here. In 4 days, you would have quickly made 17 points, all right? Now, at this point, a lot of our students get greedy and say, well, Steve, gosh, maybe I can make 50 points. This is great. But remember, we always advise in the beginning while you're learning to get out, if you're going to use this exit plan, to get out at the 4th and final one, because look what happened after that. You see how it kind of tried to hover there and then automatically fell out of bed, okay? So that's why we always say, if you're going to use this plan, exit at the 4th and final level. Here's another example right here, all right? This was in SWKS, and this was just a couple of weeks ago. A sell signal was generated. Obviously, all the bars are red, but this is the only one that matters. All we have to do is click on the arrow here, and automatically we were provided on our platform with 4 separate exit levels. So if you were short this, and you wanted to get it in and out quickly, you would have chosen to exit here or maybe here. If you wanted to have a more moderate exit, for time in terms of holding on to your position, possibly here. And this is the fourth and final exit point. Remember, this is all auto-generated on our platform. There's nothing for you to do. And we teach you what these are based off of. So remember, this is not a black box. You know exactly what they're based off of. So once again, you decide, not us, you decide where you want to exit. And right here, let's say you decided to use the fourth and final one. Well, in 3 days, you would have made 15 points. Once again, most students get greedy, especially the beginners. They say, but Steve, I mean, this looks terrible. The market feels terrible. I mean, I want to make more. I could make maybe 30, 40 points. Well, look what happened after that, okay? You would have given away all your profit. So this is a great tool. This comes exclusively, and you'll only find it on our platform. Let's recap before we go into the question and answer period. Remember, strategy number 10 is our only short-term strategy. That means that all the requirements are based on short-term rules. It doesn't mean you have to only trade it for 2 or 3 days, okay? You can apply it to weekly charts, to monthly charts if you'd like. Now, it uses the PET D to determine the short-term trend. It's not going to use the buy-sell line. So that's something that's different from a lot of our other methods. Now, buys are identified as a shallow pullback. In other words, you want a 1 to 3 day pause or a sell-off in a short-term uptrend, meaning that the PET D bar is green. Sells are just the opposite. You'll have a shallow pullback. This is a 1 to 3 day pause or a bounce in a short-term downtrend, meaning that the bar is red. So that's basically the gist or the process for these short-term setups. So ask yourself, after the examples you just saw, most of these happened within the last 2 weeks. Do you think this short-term strategy could help your trading for the remainder of the year? Now, the first quarter of the year is just about over. It's going to be over in the next week or so. How are you holding up so far? Are you anywhere near where you thought you'd be at the beginning of the year when you made all these hopes and plans of how much you wanted to make per month or per day? Most likely, if you're like most traders, you're not anywhere near meeting those goals. And that's okay. But we really think we can help you with the great offer we have for you today. So here's what we're going to apply to all the people that have attended today. This is our great attendee discount. We're going to offer you, obviously, strategy number 10, our short-term trend trader. You'll get the entire rules to this. This comes with the PET D for short-term trading. It's the combo indicator pattern-based method, different from anything else we have. You'll get the complete course rules, the aggressive as well as the conservative version. Remember, average trades last 1 to 2 weeks, or that's 5 to 10 trading days, or 5 to 10 bars. Let's say you say to yourself, well, Steve, I'm not a day trader. I like to trade weekly bars. Sure, you can apply it to weekly bars. That just means the average trade will last 5 to 10 weeks, okay? You'll still get signals, but it's based off of the bars. You can apply this to option trading. This is a great addition to your option timing as well. And you'll get educational correspondence from me. Now, everything you saw today was displayed by using our platform. We specifically designed it to make it simple. You saw how simple it was. With one click, you could see the PET D. With another click, you could see all the strategy 10 signals. So this is the educational platform that actually teaches you how to trade these short-term markets. It's like having your own personal mentor. If I couldn't be there sitting next to you during your trading day, it's the next best thing, having the PTS Primo charting platform. So here's what we're going to do. We're going to throw in a full year. If you decide to become a strategy number 10 course member, you're going to get a full 12 months free of the platform. Now, the platform comes with a host, dozens of different techniques and methods that I've accumulated in my 45 years, things that you won't find anywhere else. These are things, a lot of things I've taken from my years on the floor of the stock exchange that you'll only find on the PTS Primo charting platform. But let me share with you what I feel are the best. These are the top 10 things, in my opinion. You're going to get one-click access to PET D, strategy number 10. You'll get our strength of trend feature, which has an uncanny ability to tell you if the trend is running out of steam or not. Personalized text support. But in my opinion, these are the best. The signal scanner and the automatic exit levels, which I just shared with you. Remember, you can scan for signals. You can go through the entire S&P 500. You can go through European exchanges. You can scan through crypto markets, futures, currency pairs. Makes no difference what you're looking for. ETFs, we provide you with all of that data. And the beauty of that is it takes less than probably 2 minutes to scan for signals on a nightly basis. For example, here's an older chart in letter W. Here is a buy signal that was generated. You could have scanned for that and seen, well, I have a buy here. I'm going to buy this. And you automatically know, even before you enter, where your exit levels are, because these are auto-generated on the platform. In just about 1 week, you could have potentially made 40 points by exiting right here in the 4th level. And then look what happened. Okay. See how powerful this is? Now, let me share with you something that happened last week. In fact, I believe it was Friday. You could have scanned and seen that letter Y had a strategy number 10 buy signal generated on the 18th, which was Friday. Okay. Now, you could have scanned 5 minutes before the close and said to yourself, okay, well, I've got a number of buy signals here. I kind of like this stock. I'm going to buy this, and bought it on the close. And look what happened. On the 21st, which was Monday, just a couple of days ago, the stock soared up 170 points in just 1 day. Okay. Now, obviously, there was some news. I believe it was once again buyout affiliated. But once again, we didn't know this. It wasn't like we have a team of researchers going through fundamental information and saying, well, what are the buyout rumors? What stocks are primed for takeover? Or what's going to happen here with this particular sector? No, everything is based off market behavior. Why? Because the market tells you just about everything you need to know in advance. So there's no reason to overcomplicate your trading looking at fundamental news if you don't need to. Trust me, I'm living proof. I stopped looking at that 4 decades ago. When I have my TV on during the day, I'm usually having it on something. I'm watching some older movie, or I have something that's of interest, a documentary. I'm not watching CNBC or the news stations. I don't really have any interest in those things. So the point is, the market tells you everything you need to know. You have a translator in the Pet D that tells you the short-term trend, and then the simple requirements tell you if it's primed for an up move or a down move. Now, remember, strategy number 10 does not predict how high or how low something will go. It's just telling you that the market wants to go higher, and this is a prime setup for you to enter. Some setups will only go up maybe a couple of points. Some setups, as you see here, will go up 170. The thing is, you have the odds in your favor. That's what we're really trying to share with you. High probability setups that are 1 click away. And you can scan for them every night if you'd like. So let's break down the great discount we have for all of you attending today. This is our short-term trend trader discount of strategy number 10. Normally, price with this would cost $49.95. We're going to discount that 10%, and we're going to drop it down to $44.95. You're going to save $500. Now, a lot of you may say already, hey, Steve, I already have the Pet D. Well, if you already have the Pet D, we drop it down to $34.95 normally, but we're going to discount that again. We're going to drop that down to $29.95. No, so you'll save another $500. Now, here's the best thing about both of these. If you can't come up with $44.95 or $29.95, don't worry. We still have payment plans. So for a small deposit, nowhere near these prices, you can still be up and running and establish a monthly payment plan. So that's the beauty. Pro Trader Strategies, my sister site, is in charge of all the pricing, all the discounts, and all the payment plans. You can establish one with them, and they can have you up and running even with a small deposit as early as today. And remember, whether you decide to pay in full $44.95 or whether you decide to have a payment plan with a small deposit down, you'll still get a full year of the PTS Primo Charting platform, absolutely free. This is like adding on an extra 1,000 or 2 to the price that we've taken off completely. So here's how to take advantage of this. Contact, like I said, Pro Trader Strategies. They're in charge of all the pricing, discounts, tech support, as well as taking your orders over the phone. I would highly suggest giving them a call at area code 310-598-6677. Whoops, I pressed the wrong button there. I don't want you to leave so quickly. There you are. And that way you can, if you're interested, you can establish a payment plan, or even if you just want to get a quote, you can call them up and they'll give you a quote over the phone. Remember, they're very flexible. There's no obligation. If you're just interested in what it would take to establish a payment plan, they can give you a quote over the phone, then you can think about it, okay? Now, that link you see at the very bottom is the info link. It will take you to the info page, and you can sign up online if you'd like, but it's not a live link. We've just posted a live link in the chat box on the far right. So if you're interested in clicking that on, just go to the chat box and click on the live link, and it'll take you automatically to that page. Now, I promised you the last portion of today's educational class we'd reserved for questions. So if you do have questions, just go to the chat box. I promise them I will answer them to the best of my ability. And I'll leave this information up here. So if you'd like to copy it down or just get the link, you can do that as well. Someone is asking, why don't you show other markets? Okay, I'm sorry. Most of our students trade stocks. Now, the majority of them do. I'd say upwards of 80, possibly 90% do. We still have people that like to trade currency pairs and cryptos even. And so that's basically the reason why. But just to tell you, I use strategy number 10 with my intraday trading on E-mini futures. So I'm living proof that it does work at other markets because I have used it from time to time trading intraday futures. I like to trade the E-mini futures in my personal trade. So it can be applied to any market, any time frame. And as a matter of fact, if you go to my Twitter page, which I share with you in the beginning of the presentation, I believe I tweeted a British pound strategy number 10 signal just a few days ago. So there you could see a perfect example of how well this works on other markets and other time frames. Okay, so if you do like to trade multiple markets, if you do like to trade stocks, and maybe you like to trade currency pairs, well, great. You don't have to get two separate strategies. You can use the same strategy for both markets and different time frames as well. Okay, good. Can you apply this to weekly bars? Yes, I don't know if you heard what I said. Yes, it makes no difference. You can even apply it to monthly bars. You can apply it to intraday trading as well. I personally feel the best or high probability setups are in daily bars, but once again, everyone trades different markets and different time frames. So that's just my opinion. There's no statistics or any requirements to prove that. So please feel free to experiment with whatever time frame makes you feel the most comfortable. But if you'd like to trade weekly bars, yes, just like anything else, the signal will be generated the exact same way. You apply the PET-D, and then the strategy will look for the requirements met on the bars, but this time they're weekly bars. And that's it. And instead of 5 to 10 trading days, you'll be 5 to 10 weeks that most trades will last. So if that's your time frame that you like to trade, that's great. And you can even do that with monthly bars. You'll get less signals because of the way monthly bars are set up, but that's okay. You can still get some high probability setups as well. Okay. Anything? Is this a live class? No, this is when you get our courses, what you're basically in is a video of a class that was taught. And what you'll do is you'll be able to see the video, and it's yours to keep. It's not something that expires and it disintegrates. So you always have it on hand to reference and always to look back on. But what you will get is my personal email address. So you can contact me whenever you like. So I was answering questions today. I'll be answering questions of our students in other courses after today's class. So I'm always there for you. I try to get back to everyone within 24 hours. So if you have any questions or something doesn't make sense, or let's say you're new to this type of trading, don't worry. I'll be there with you every step of the way to answer your questions so that you fully understand the process, okay? Remember, a good teacher, a good mentor teaches his students how to trade, but he does not trade for them. So I'll be there with you every step of the way. Okay, any more questions while you have me here? I guess not. I'm scrolling down, and I guess if that were all the questions, then I just want to say thank you for attending. I hope you learned something. I hope you saw the simplicity of this great short-term method. And remember, everything you saw, most of the examples most of them took place within the last 2 to 4 weeks. We just showed you the very last one that took place within the last 3 or 4 days. It was a 170-point gain. So this is not something where we like to cherry pick and show you the best examples and we look back and they're 5 years old. This is something where we really want to show that it's happening all the time. So if you're interested, remember, I would highly recommend just giving Pro Trader Strategies a call, 310-598-6677. They have trading consultants manning the phones right now. There's absolutely no obligation. They're not going to try and force you to buy or something. They'll just give you the information. If you'd like to get a quote for a particular a deposit that you have to put down or a payment plan, you can do that. And then you can think about it, but I would just really suggest don't waste a lot of time thinking about it. A lot of people in the past have told me they've waited a couple of weeks thinking about it, and then they say, oh, you know what? I just can't really make ends meet with my current trading method. So I think I'm going to take advantage of that offer. Unfortunately, that offer may have gone already. So, take a good couple of days to think about it, but contact Pro Trader Strategies. They're very flexible and they're willing to work with you with any pricing. Okay. Okay, now I can take you to the page I jumped to before. That's our disclaimer. So as we take one last look, once again, I just want to thank you so much for attending today. I hope you learned something. And most of all, I look forward to all of you becoming students of mine in the Strategy Number 10 course. Have a great Wednesday. Have a great rest of the week. And I wish you all the best of luck in trading. Bye-bye.